Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of March 9th, 2015. Hello, I'm John Thomas with Prime Residential Mortgage, here to give you an update. Well, last week was not kind to Maryland mortgage rates. Mortgage rates did spike higher by between 0.375% and a whole 0.5%. If you take a look at the bond chart on the screen, you can see that giant red candle on Friday after the jobs report. Mortgage bonds sold off, almost 100 basis points dropped through two floors of resistance. We had two reprices for the worst. If you look now, we have a clear downtrend in the bond market. The bonds are selling off. That's moving interest rates higher. We're looking for a floor of support, and the next floor of support is about the 200-day moving average, which is another 30 to 40 basis points lower. So we still have some room to the downside. So with that in mind, we're going to go ahead and recommend locking your Maryland mortgage rate to start the week, as we see the bond could sell off even more to find a bottom. Now, long term, 60, 90 days, we're still looking for mortgage rates to reverse and move lower again. But short term, if we close in the next 30 days, go ahead and lock it in. Now, if we look at that report that came out on Friday, the jobs report for February 2015 released by the Labor Department, it was a shocker. Jobs came out at 295,000 jobs created, well above the 230,000, 240,000 expected. Unemployment rate dropped to 5.5%. So it looks like a good report on the surface, but when you dig into it, the unemployment rate dropped because 354,000 people dropped out of the workforce, no longer looking for work, no longer counting that number. We can see that if we look at the labor force participation rate. It actually dropped from 62.9% back down to the low of 62.8%, the lows not seen since the 70s. Labor force participation rate measures number of people 16 years and older eligible to work. They're actually working. So when that drops, that explains why the unemployment dropped. Not because people went back to work, people no longer looking for work. So overall, when you dig into it, not as good, but the bond market reacted to that $295,000 claim, 95,000 claim, and that sold off stocks and bonds. So it was a bad day on Friday. Now, if we look at the weekly initial jobless claims came out on Thursday, they showed 320,000 claims filed. That's up 7,000 from the previous week. And if you look at the last 3 out of the 4 weeks, that's 3 weeks above 300,000 claims. And this is what we were expecting. We were predicting this. We've said the energy sector's been losing jobs. They haven't been showing up late yet. They started showing up now in the weekly initial jobless claims. Didn't make it into the jobs report, but we're thinking the March jobs report is going to come out worse than expected as these energy sector jobs start hitting the numbers, which is what we saw this week in the weekly initial jobless claims. Then we saw, if we look at the price of oil has been low. That has been hurting the stocks. And if we look at the this week, we saw that the oil reserve, that's the number of barrels of oils we have in reserve, the last 7 weeks, we've been importing and producing an excess of 1 million barrels a day. So that's crazy. That's going into the stockpile. The stockpile is at the highest level seen in 80 years, and it's almost at capacity, which means we can't store any more oil. So what that's going to do is cause a glut on the world market, and some experts are predicting the price of oil could drop another $20 a barrel. So that is huge. We'll have to keep a lookout on that. If that were to happen, it'd be bond-friendly news that would help Maryland mortgage rates. And then the housing news, CoreLogic released their home price index for January 2015. It shows home prices were up 5.7% from January of 2014. So that's year over year, great increase. And January represents the 35th consecutive month of home price increases nationally. Home prices were up 1.1% from December to January, and the predictions are a 5.3% increase this time next year, January 2016. So overall, still a good housing market, great time to buy a home. And then USDA rural housing loans, they are looking at loans submitted in Maryland on February 25th. That was as of Friday, March 6th. So there's about a 10-day delay in them reviewing files. So plan accordingly on your closings. And then the local news, the next first-time homebuyer seminar is Saturday, March 28th. That's from 10 a.m. to noon. That's in Towson, Maryland at the Sheraton Baltimore North Hotel on Delaney Road. You can register for the event by giving us a call 410-412-3319 or online www.marylandhomebuyersseminars.com. Look forward to seeing you guys next week.